CG Power. It came out with its Q2 earnings, and we're joined by Mr. Amar Kaul, the MD and CEO at CG Power Industrial Solutions, who joins us now. Welcome to the show, Mr. Amar. First off, your sense as to how the quarter has gone by for you. There are some pockets that have done very well, some pockets which have, not done very well. So your sense of the entire quarter gone by, and second half, how is it shaping up?
So thank you very much for having me here. So from the quarter results that we have, I think it's a fairly strong growth that you would have seen, about 19% growth. And profits, of course, the result that you see, it is showing downward trend, but I'm honestly not worried about it because there's almost 36 crores that we invested into strategic initiatives, right from the acquisition expenses or the strategic initiatives for our go-to-market strategy. So to me, I call it investment to take the short-term hit, but for the gain in future. So honestly, I'm not really worried about it. We continue to gain the momentum.
Got it. Your margins were down by around 320 basis points, and this is on addition of a one-off cost, which was around 36 crores. But even if we consider that one-off, the margins have kind of shrunk as compared to the YOY situation. So first of all, what has happened there? And going forward, do you expect margins to be in the same range, or do you expect a recovery?
Absolutely. So very good question. So we had, if you see power sector, the segment that we have, it has been doing fairly well. On industrial side, we had a bit of stress on the motors piece in last 2-3 quarters, but I think it's already hit the bottom and it's already started sliding up. So with the operational excellence action that we have initiated on the lean thinking in the manufacturing plant as well, that started showing results. So for the quarter, it did not show much, but if you look at individually for September performance, we gained almost 200 basis points on that, which will hopefully get reflected in Q3 as well. So good days ahead.
All right. So then where do you expect margins to be at by the end of FY25?
I think we should get close to where we were at, between, say, 14 to 15%. That's where we would expect it to be at.
All right. In terms of your order book also, your order book is up 50% YOY, which is significant growth. So I want to understand, first of all, the kind of breakup of this particular order book. And secondly, what will be the execution timelines like in terms of revenue?
So these order books is majorly in the power sector. As you know, the sector is booming, and whatever we add to the capacity, you always fall short of that. And that's where we need to keep investing more and more to expand our capacity. So in power, typically we have switchgear and transformers. So both have scaled up, between 44 to 50% increase in the backlog that we have. So and the momentum continues.
Okay. And in terms of, QIP, you've recently approved a QIP of roughly 3,500 crores. Now, I understand that this fundraise is for expansion plans as well as for innovation, but give us some more color as to how exactly this big amount will be utilized.
So there are three different areas. One, if you look at the kind of backlog we are building and the growth we are seeing in the sector, so we need more money for the expansion. So I would say approximately 1,200 to 1,500 crores is, I have very clear visibility. After board approval, we'll of course initiate that discussion for the expansion on the power sector area. And then we have, commitments to the semiconductor industry that we have already bought and in the process of buying from Renesas, the radio frequency components business. And third, I would say in terms of innovation. So we're investing a lot in terms of innovation to make sure we have the best-in-class products, which is made in India, for India, and the globe.
Got it. Mr. Kaul, two things here. You're expanding your capacity overall in terms of power as well. So give us some color as to where will the capacities be at from a long-term perspective, let's say by the end of FY28.
Oh, so FY28, obviously. So today, if you see the board approvals that we have, we should be getting, if I take transformers, so we'll go up to 40,000 MVA. So I would expect it to go up to 80 to 90,000 MVA by 27-28 time frame, at least. So and we have more appetite to go in that area.
In terms of semiconductors, you said you will be putting a lot of those money raised in terms of the OSAT plans as well. So what is the kind of strategy you're adopting there? How will the money be utilized? And from when do you expect the kind of revenue inflows from this particular semiconductor facility that you'll be coming with?
So there are two segments. So OSAT, if you know, is into assembly and testing. So that project is as per the plan. The plant construction is going on full swing. The leadership management team is in place. So as per the timeline, 26, we should be able to see revenues coming out from there. And if you look at the other side of semiconductor business is the design piece of it. That's where we are pouring into buying the company from Renaissance, which of course with the regulatory approvals will take at least 4 to 6 months more. And then we build the capability both for designing as well as assembly and testing to close the loop.
Got it. Mr. Kaul, you're also foraying into the Kavach space. So give us some sense as to, what exactly are you exploring there? Do you already have customers? What's the kind of strategy you're adopting there as well?
So Kavach, as you know, is TCAS, Train Collision Avoidance System. So good news is that we already got a development order from Indian Railways, which should get executed in next 8 to 10 months. Plus, there's also a big tender, 7,500 crores, which has been floated. So hopefully, even if you get 10% of that, that needs to be executed in less than 12 months. And Railway Ministry has been pretty bullish on that, and they want us to go fast on that direction as well. So pretty strong on not only for the Indian Railways to improve on the safety piece of it, but also making sure that there's a good synergy with CG Power business where we import a lot of electronic components which can be actually fed from GG Tronics itself.
Right. You rightly mentioned that you've also acquired 55% in GG Tronics. Just to understand, because this is Kavach anti-collision system. So just to understand that this you've acquired for roughly 3.2 billion rupees. What kind of a top line addition will this make to the overall top line of CG Power?
So yeah, it will go step by step. But I think what we are looking at, for example, even if we get this tender of so I think that itself will be about 700 crores, which should get accomplished in next 12 to 18 months. So that's only one piece of it. Plus incremental things will keep happening. So pretty strong synergy between the two companies.
And what are the kind of margins when it comes to the Kavach system for you? Where will the blended margins be at?
So we don't declare individually for each of the businesses separately, but yes, if I say overall PBT margin that you look at 14 to 15% that I said in the beginning, it'll be incremental to that.
All right, and the Renaissance acquisition that you've made for semiconductor design, give us some more color with respect to that. How will that play out for CG Power?
So that, if you see, we are trying to build more capability into the country, not only for the organization CG Power. So this will be primarily into two segments for the radio frequency components business, which is wireless infrastructure and SATCOM, which is satellite communication. And there are different products along with that which you have. But if you look at the main applications, for wireless communication, it's the 5G network, the way we are expanding into India. So we'll be introducing power amplifiers, PA bias controllers through this acquisition. And for SATCOM, if you see the entertainment system in the aircrafts that we have, so that's where we will be focusing on. And it's generally called LEO, which is low Earth orbit broadband constellation. So these are the two focus areas that we have in this acquisition.
Right, and you're also foraying into newer end segments like ESL orders, biogas, ethanol progress. So I want to understand as to what's the progress with respect to this, as well as what are your plans with respect to this?
Oh, I think that's interesting, and that's why I said, we are not looking at the market, how it's going up and down. We are the thought process for the group has been control what you can control. So we can look at the markets where we can foray, and we have not been there. So, for example, you talked about EESL. We had already received for our consumer products division huge orders, which is getting executed right now. But then we looked at other businesses, for example, drives and automation. The drives, we got another 10 crores order along with the same ESL. And then we linked it back to the motors also. So recently we got about 8 crores for that order. So, and there are more in the pipeline. So we're exploring each of these new areas, biogas, Nuclear Power Corporation. So each of these where we are not present, so pouring into those verticals as well.
Got it. Well, Mr. Kaul, thank you so much for taking our time and speaking with us at NDTV Profit, and all the best for the second half of the year.
Thank you so much. Pleasure talking to you.
Yeah. Well, with that, we're completely out of time on this edition of Small and Mid Cap Show, but there's more lined up on the other side. Stay tuned.